Dalian is a second-tier city in China and has seen its GDP grow by double digits over the last few decades based on investment in world-class infrastructure, building huge property developments and creating jobs for the middle classes. But over the last few years, growth has been slowing down across the country, and Dalian hasn't been spared either. For the first time last year, it posted growth of 5.8%. So what's going on? Well, China says it's all part of the plan. This country has to transition from an economy that's been led on exports and investment into one that's more focused on domestic consumption. But traditionally, Chinese consumers have always been seen as savers. Is the government doing enough to encourage them to spend?
The numbers seem to suggest that people are spending more. Official data now shows that domestic consumption makes up 45% of the economy.
My salary hasn't gone up, but as I get older, I have more expectations. I usually spend my money on clothes.
I definitely spend more money these days, and my standard of living has improved.
It's obvious. What happens in China, the world's second largest economy, will have an impact elsewhere. The problem is, though, that no one's really sure how bad the slowdown is. Many economists still remain divided about the official data that's coming out of Beijing. Some say that it's not transparent, makes it very difficult to gauge the depth of the slowdown. One thing is certain, though. China's economy is slowing down as it transitions, and that transition is likely to be painful, and it will take time. How the government manages this transition will be a key factor in determining how markets react in the future. Karishma Vaswani, BBC News, Dalian.